2,000 years. OCOE.
Welcome back to another one. So today we're going to be doing a review on the daily range for the 13th of January. Today's Monday, alright? And just going to be going over everything again, the process of what I look for, going from the long-term perspective down to the short-term perspective, the setups that played out for today, how you got to capitalize, and just have the intentions and the hopes to give you guys more clarity on how to use ICT concepts within the daily ranges. Alright, so going into this week, I actually put out in the community tab that I was expecting today specifically to be kind of choppy, simply because it's the day after a large range day, which is NFP Friday. It's also a day with no news, alright, and it's the day before PPI news, and then we have CPI later. So with all these things adding up, I've seen that within my studies earlier on, I've definitely had a lot of trouble within these environments, and I choose to really be nimble on these days, or not even trade on these days in general. Alright, so going on from the daily time frame, what we see in the daily is that we actually failed to close below the previous daily low. This is the candle for today. As you can see, it's a very large wick but a small body. Overall, the range for the candle is about 350 points. Yeah, so the range is about 350 points for today. So what we see is price expanded lower to start off the week, just continuing with the bearish volatility that we had on Friday, and it traded to this low right here. All right, Wednesday the 20th of November 2024, traded to this daily level and tapped that. Okay, so that's where price expanded to, and then it started retracing back within the previous daily range. So going on to the 1 hour time frame, what we can do is we can, like always, right, we'll mark out the extremes with time. So we see price expanded lower overnight, basically forming the Judas for the day into the daily level, and then we started consolidated here. All right, and then we see that going into the PM session, price actually traded into this fair value gap and then started expanding higher. Now, if we actually look at these candles, right, we can see that price was respecting a fair value gap right here. Okay, so we had a bearish fair value gap being respected, and price was literally consolidating within this whole range. So this is what I anticipated for today, simply because it was a day with no news. It was a day after a large range day, and overnight we had a very large range move. Okay, so when all these things come together with confluence, you can actually anticipate how the AM session will unfold, which will be very choppy, and we see that we had a nice trending PM session. Okay, so that can be anticipated. Going to the 15-minute time frame. 15-minute time frame. All right, we're always looking at what session made the low of the day, what session made the high of the day. All right, where the news volatility came in, and the key levels that we're looking at. So we see here that we have London actually forming the low of the day today, and New York AM session actually stayed within London session. Then price expands going into lunch, and we see we get a close above this swing high right here. Okay, then price consolidates here. We have a big consolidation, and going into the last hour of trading, we have an expansion higher. So looking at this, as you can see, it's a lot of chop. We see we have a low getting taken out, then we have a high. All right, then we have this high getting made, and then a low getting made again. So it's very choppy, like I was saying, but this all can be anticipated, seeing that we had a large range London session, all right, going down. This shows us that the New York session, especially the AM session, is going to be very choppy, since price goes from expansion to consolidation to expansion. All right, you want to understand that since prices expanded in a previous session, it's most likely to consolidate going into the new session. All right, So that's for the 15-minute time frame. That gives us a framework and an understanding of what session makes the low of the day. And swing points, we see that we have a short-term low here. Then we have another short-term low and short-term low on the right. So that makes this a classical intermediate term low right here. All right. And we see that never gets broken just because that's for the simple fact that it's a classical intermediate term low and it's reacting off a higher time frame level. Okay, which is the daily level here. We're just playing within it, consolidating at it. And then we see how price forms another short-term low, okay, and then expands higher. And this low is the low of the day. Going into the 5-minute time frame, what we want to do is we want to draw our overnight session. We're going to use the overnight session to give us our range that we're going to use for the day. So here we have the overnight session, 5 a.m. to 9. All right, UTC minus 5. New York time. So we see that price when we started off the day, okay, if we're just coming on the charts at 9 a.m., price takes out the low here of the overnight session and then trades above the high wicket, okay? So in terms of ICT dealing range, ICT, classifies a dealing range as any price leg that takes out both sides of liquidity. So we have sell side liquidity taken out and then buy side liquidity taken out. All right, that'll form the dealing range that you'll be playing within. So this is the overall dealing range that we had. Price retraces, all right, doesn't take out the low of the dealing range, then expands higher, closing above this high of the range. All right, we get a retracement, a deep retracement back into the range, and ultimately we expand higher after this. Okay, so this low of the day here could have easily been anticipated simply because we took out the overnight session low, and then what happened was this time is meeting with price. So we have overnight session low here. All right, we have SMT that also forms. So if we look at ES, we see that ES failed to actually take out this low. All right, the same low right here. ES failed to take it out, and we have ES making that higher low, while Nasdaq making that lower low, which is actually SMT. Okay, so we have SMT happening at the lows, which is intermarket analysis. Remember, the algorithm operates off of time, price, and intermarket analysis. We have SMT at the low. We also have a key time. So usually when we have a bullish AM session in New York on Mondays, the low of the session will form within the time of 9:30 to 9:45 a majority of the time. Okay, and I got these statistics off of Rise Analytics. Shows me that time. It's a very, very, very high probability time, reversal time. So all these things add confluence to trading, and it just allows us to get more conviction and in our edge and our setups. All right. So we're aligning this. We have SMT. We have a key time of the day. All right. Now we're going to be looking for the setups that occurred. Okay. So if I go down a lower time frame, we have SMT at overnight session low. What we see here is after we hit SMT, we actually have price. All right. Form a low, trade into a fair value gap, and then take out a short-term low. So we have a raid on short-term liquidity. Then what we actually get is a large displacement. Okay, so if we think of 2022 model, run on liquidity into higher time frame right level, which is a 1 hour low, SMT at that 1 hour low. Then we displace aggressively, breaking this inversion gap. Then we retrace back into the inversion gap. All right, so this is a very high probability setup, and this is the trade I actually took for today. So stops would go right at around 30 points. Okay, right at the lows. We have a large, very large fair value gap, so we did not expect all of this to get filled. And you'll be targeting to the highs. All right, that's overall the trade idea. It's a 3R trade idea, but that's pretty much the trade that played out. And it's 2022 model, A plus trade, even with the conditions of the market and it being choppy and expecting it to be range bound for aim session. There's still logic and reasoning behind why I took this trade and why it played out and why it ran aggressively to take profit. All right. All you need to do each day is capture a bit of the daily range. You don't need to capture the whole thing. As you can see, the daily range is 343 points. This move, just capturing this trade, was about 100 points. All right. So you're capturing a good amount of points, but you're not looking to capture the whole daily range. You got to understand when to take profits. So that overall was the trade for the day. After this, we see how price trades here, okay, above the overnight session high. Then we get large displacement down. We actually get like a fractal 22 model here. If you look at it, we have a short-term high rated. We have displacement that takes out this rebalance intermediate term low. Okay, it's a rebalance intermediate term low because it actually rebalanced the fair value gap. After it does that, price retraces within the displacement range into the fair value gap in the premium of the range, and then trades lower. Okay, after that, price retraces lower here. Okay, and then we see how price literally comes to the low of this fair value gap. All right, we close below it here, and then we expand aggressively, and then it trades the high. All right, that's pretty much what happens. Going into the lunch session, we see that price is still within the range. Then we actually trade lower one more time. All right, if we extend this out in time, price trades this level right here, which is the order block here, formed at 941, and then it expands higher, leaving the range, and ultimately going to make a new highs for the day. So that's what happened for today's range. All right, all you got to do is understand, one, having a narrative of a higher time frame where price is likely to go. Overall, I was anticipating that price was going to go higher and take out London highs, simply because the daily range for Mondays specifically are capped at around 260 points, around there. Before we even started trading for the day, price already had moved a significant amount of points, almost 200 points. So I was not anticipating price to really displace anymore, especially because we got to this daily level and we're consolidating. I was anticipating price to actually form a reversal. All right, so that's why I was looking more so for buys, and I was looking for, again, price to actually take out London highs and trade there and ultimately go to Asia highs. So that's the reasoning, okay? And that's why I want to see price trade higher. Now, it wasn't the cleanest AM session, but if you traded PM session, we see we have this inversion gap trade above, then a fair value gap set up, and price trends here. All right, so it's very clean in the PM session, which you can anticipate. So I hope y'all enjoyed this one. If you got some value, make sure to drop a like and subscribe to the channel, and I'll be sure to drop more reviews on the daily ranges going forward.